Hey, happy holidays, friends and neighbors inside the gates of the RPV. What do we got? We got Thanksgiving. We got the month of gratitude, post-election. And actually, that's so interesting number to always track the year after the election. I'll bury that lead.
Yeah. And something interesting to think about as rates have risen, is that an opportunity for investors and particularly high-end homes?
Yeah. We always love starting with a spattering of some numbers, not because numbers are going to do all the lifting, but what they help us kind of understand is like compared to what, right? And then the what is then what does that mean to me? So we're in an island, right? We got our little 100 and some odd 50, 60 lots inside the 3 gates and the 9 streets. I don't even think that's right. Throwing those
It's a lot of stats
out there. But here's what's interesting, right? So you pan back out a little bit. It's more of the same right now, meaning like, hearkening back to the last 2 or 3 episodes we did of this stuff. Inventory up, okay? So we've got 4%, 21%, 36%, like all of the houses and it's all starting to swell. Meanwhile, less people are taking out their checkbook and stroking checks. So we have closed sales down about 40%. So you can see this is like, okay, so, supply, demand. But here's what's interesting. Days on market until sale up 170%.
Yeah.
So not only is it swelling, but it's stacking and swelling. And then less people actually writing checks. Last numbers, this is where it hits home, I think, maybe for us inside the gates. Prices finally flat, regressing a little bit, and list price to sales price, meaning the number you thought you were going to get versus the one you actually landed with, is down almost 3%.
Okay.
So what is that lay person of the numbers? What does that tell you?
Sure. So you see a lot more homes coming on the market. It sounds like staying on the market a little bit longer. Prices kind of chilling out a little bit. Maybe meeting a bit of an equilibrium between the buyers and sellers right now.
I'd like to think so, but I think bigger picture is the year after the election always tends to be gangbusters for real estate. I think with the one exception was the Great Recession, Obama in 08. And that makes sense, right? Because people strategically are thinking about like, oh, it depends on what gang gets into the White House, the Reds or the Blues or whatever. And so there's kind of almost like a voluntary, like a moratorium on the deal. And then bang, and then of course the new administration always wants to come out on fire. Economy, stupid, right? And so the confluence of, I think it's going to be exceptionally so this year because of so many people that removed themselves from their normal process and cycle of buying and selling over the last 3 years because money got expensive. As soon as they see those rates drop back down again, what are they saying? 5.5 to 5 3/4?
Yeah. Sometime next year
as an average. Right now we're at like 6.5, 6. And that right there, gang, that's like 10 to 12% of your purchase power.
Yeah.
So when you're in a luxury market like we are in RPV, that is the difference of whether someone is going to buy or not, buy your home or not, right? And so I think it's going to be like a powder keg because of all the strategery of people who elected to not do something over the last, then you have the election, then you have the rates lowering. I think 25 is going to be a great year for real estate.
Yeah. Speaking of strategery, a lot of people have the ability to buy when you're in the luxury market. You might have a little bit more flexibility on the margins for your purchase price, right? And so sometimes rising interest rates, higher supply, flattening prices can actually prove to be a little bit of a benefit, right? A little bit of a silver lining. So if you're someone who likes to invest in real estate, if you're someone who thinks that opportunity still exists in San Diego, Alpine, like these really attractive communities, then these could be really sweet times to get in when everybody else is kind of sitting out and being scared. Higher rates, that's a higher payment, but that's a temporary component. And so if you can get in and make your move now, it's actually a sneaky little hack.
Because you're locking in your price.
Yep.
And then hopefully riding the opportunity of your payment getting improved down the road.
That's right.
Yeah. Gang, first of all, happy holidays. If I don't get a chance to see you live, thanks for tuning in and checking us out. And as always, let us know if there's anything that we can do for you or somebody that you might know that you want to introduce to us who wants to get into or out of our beautiful ranch.